Good afternoon, everyone, and welcome to Vantage Markets Australia's The Monday Open, brought to you by Vantage Markets Australia's private client team. That's me in Sydney, Jeff. Ollie also in Sydney. G'day, mate.
Hey mate, how you doing?
Yeah, good. We do this for you guys watching. We do this separately because we haven't worked out how to do the microphones without feeding back if we're both in the same room. But we are both in Sydney. You can probably see a little bit from the backgrounds that we're facing the same way in different meeting rooms. But all good. We're here and looking forward to talking about markets. So we've done this a few times now. You guys are pretty well aware of the way that we run through. We'll go through some of the market moving events from last week. We'll talk a little bit about what we're seeing for market moving events for this week, do a little bit of technical analysis, and then do some Q&A at the end. So nice and simple, nice and clear. Last week, the big story last week was the Australian budget or the federal budget. I think it was the biggest story in the markets for us locally, but pretty much was ignored globally. But locally, for me personally, it was interesting because it was such a disappointment. In an election, this is an election budget, so the election was called a couple of days after this. We got a tax cut of $5 a week. Thank you very much for that. That'll pay for this. It's not means tested, which means that multi-billionaires in Australia are getting their $5 a week tax cut too. The Labor government has also extended the $75 a year a quarter energy rebate. That's a quarterly rebate that goes through, I think it's a fixed sum that we're getting as a tax rebate because of energy prices being high because, well, let's face it, they didn't plan for the future. The budget papers are also showing that the budget deficit is going to blow out over the next couple of years. Can't see why because it's not through tax cuts. And they're expecting inflation to be about 2.5% in the year to June. So it's interesting that they don't use the RBA inflation expectations. They do their own. They're the Treasury expectations. But really, I mean, they're coming in pretty much the same. In reply, the next day, Peter Dutton from the opposition gave his reply. I always found that a little bit interesting that their Treasury spokesman doesn't do that. It's the leader of the opposition. All they could come up with was halving petrol excise, which is already halved, and they were just going to extend it out for another couple of years.
So I did see a couple of takes from economist Clifford Bennett as well. He labelled the fuel excise tax an incredibly disproportionate tax on the working class. So it didn't seem like it did too much good from him coming out with that one.
Nah, Cliffy doesn't like taxes. And neither do I, as everyone who works with me knows. I just think, honestly, I mean, backwards and forwards on this one, I think it's strange. I mean, normally in election years, the budget that we get before the election is what we like to call in Australia pork barreling, where they're giving money away left, right, and centre to try and get voted in. Honestly, my read on this is that our, I guess, statement of position in terms of the government balance sheet is so bad that they just can't come up with anything. I mean, I was looking at I'm one of those guys that digs down into the actual budget papers, all 100 and something pages of them. Our biggest expense is welfare by a significant amount. I don't know another industrialized country where welfare is the biggest expense, but that's our biggest expense. And it's nearly four times bigger than our next biggest expense. So I think, really, they can't start cutting welfare right before an election, but honestly, that seems to be where it's going. That was the big thing for last week. The markets didn't. Did you see much of a movement on the Aussie based on the budget there, Ollie?
Well, the Aussie actually did close the week up 0.36% on the week against the US dollar. So it seemed like it did have some good impact short term, but it's kind of fallen off since the turn of the week this week.
Yeah, fair enough. And just to round up on the budget, that means we've got an election called on the 3rd of May, which is just a little bit over a month away. So that was the budget. Last week, we also had on Wednesday the Australian CPI number come in at 2.4. That was a little bit lower than expected. The market was expecting it to come in at 2.5. It came in 2.4. I mean, 0.1, but I mean, that's still, a decent move away from expectations. CPI numbers normally come in pretty close to or exactly at expectations just because they're normally well flagged. That slightly weaker CPI, I think, did help and support the Aussie a little bit over that course of that particular day there Wednesday, didn't it there, Ollie?
Yeah, it did pretty well. I guess it's like over the start of the week, as I said, I went up, closed the week up slightly. I think day by day, I think it was a little bit up and down, a bit of volatility in it, but it's kind of fallen off since then. I think turn of the open today, it's dropped off a little bit. But yeah, I think the CPI did do good in the short term. A little bit of volatility in the market, but not too much movement on it.
All right, cool. Where do you want to be on the Aussie? Do you think it's you want to be long or short Aussie at the moment?
I think I'll definitely be short in the Aussie at the moment.
Yeah. Well, the US dollar is the big one, right? So, I mean,
Yeah,
it's a big.
exactly.
We'll talk about the next week's slide next, but that's the big one. We also had on Thursday of last week, we had US GDP, final GDP come in as expected, 2.4. Very rarely does the estimate come in differently to the final. What they tend to do, excuse me, is they will they'll state them the same and then revise them down the track when people aren't looking at the revisions. That's just one of the nice little tricky ways that governments like to mess with us. That was last week. Did you want to run through this week?
Actually, I will just touch back on the US final GDP from last week as well. So I printed 2.4 against the 2.3% expectation. It did signal a bit of a downturn in the US markets, which did flow through into the US index markets. With the Dow, the S&P, and the Nasdaq all closing 3 out of the 5 sessions last week a bit lower, and all of them closing the week lower as well. Specifically on the Dow and the S&P, they both closed last week below their respective 100-hour moving averages, which did mark a technical shift in favor of selling heading into this week ahead.
Yeah, we don't normally talk about equity indexes here because I don't trade them. I get to talk my book a little bit, but it doesn't look good for us for US equities at the minute. And I mean, the US is still leading everywhere else in the world. I think after this last 5 or 6 years of continued growth in equities, I think we might be in for a bit of a pause.
Yeah, looking like it is going to hold for a little bit. I mean, especially in light of the tariffs coming up this week, it's a little bit just like who knows. It's a bit of anyone's game at the moment, just anyone's guess what's gonna happen.
Yeah, fair enough. All right, did you want to jump into next week?
Yep.
This
So for this week, so big announcements coming on Tuesday after the RBA cash rate meeting. So pretty much no change expected on that one, as the RBA likely will opt to hold the rates to curb the inflationary pressures. All the big major Aussie banks are expecting a couple rate cuts over the year to come, although none this time around, especially around the uncertainty around the election. As we know, the governments have varying policies, particularly regarding tax and spending. So the RBA is expected to hold the rates until there's a bit of a clearer picture on what government policies are to come. As for how this would impact on the Australian dollar as well, let's just say it probably won't do it any good. There's a lot of market sentiment currently for selling the Aussie dollar, so I don't really see that changing anytime soon, especially if the RBA doesn't intervene on that.
I think
what do you reckon, Jeff?
Michelle.
Any changes?
After the last meeting, Michelle Bullock was pretty clear that she doesn't really want to do anything until we get a clear indication on what's going on with US tariffs. And unfortunately, based on the timetable, the tariffs don't come out until the day after. So I think, you pretty much bet that they're not going to do very much on Tuesday. The wording might change. They might fiddle around with that. That's, spend 8 hours
leave
in
it
a
a bit
room having lunch.
open-ended. Maybe hinted towards something, but who knows?
Well, this is it. They might give a little bit more guidance about what they want to do around tariffs, but I mean, given that none of the US guys actually know what is going on with the tariffs, I doubt very much that our little economy does.
Yeah, exactly. All right, so we'll go on to Wednesday. So the big one coming that day is Liberation Day, as US President Trump would like to call it. So I'm sure most people that will be watching are aware the US are going to be rolling out their reciprocal tariffs this week. So we've already seen a lot of major announcements coming through about the tariffs, particularly those targeting Canada and Mexico, the EU, Australia, China, among many, 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 many others. So we'll find out the official tariffs come Wednesday. I believe that. On the Wednesday following the announcement. So one thing we can definitely expect off of the back of that is the volatility in the markets and a degree of inflation targeting all those impacted economies. It's a bit hard to say which countries and currencies will be impacted the most, but in all honesty, I would not be surprised if it turned out to be the US being the center of it all. This is also supported by Friday's US PCE price data index release, which printed 2.8% above the 2.7% expectations. So for anyone listening who's a little unsure, the PCE data is the US Fed Reserve's preferred gauge on underlying inflation. So this data print showing inflation is rising above inflation does signal a weakening US dollar and may shift in favor of selling ahead of the tariff announcements. Yeah, what do you reckon, Jeff? You heard much news about the tariffs, or who do you reckon is going to be impacted the most?
This is the problem, right? Is all we've heard for the last 3 weeks is tariffs, but no one really knows what's going on. I think what the upwash, my guess, having sat at these desks for a long time, is that what the result will be is that a lot of them will come in pretty much as expected. We might have a little bit of sell the rumor, buy the fact on the Canadian dollar and the Mexican peso. I think it'll be interesting to see who's left out or what's left out. I mean, he's talked about everything from 25% tariffs on all imported auto cars to the same number on everything that's steel or aluminium in terms of base. And then he's talking about also reciprocal tariffs against every country that has a budget surplus against the US, which is pretty much everyone. So, I think it's going to take a couple of days to actually work through exactly where everyone's at. I mean, I said it last week, and I'll say it again this week. I went through and did a Google search, simply what does the current what current tariffs do the US government have? And the only one that came up that they actually currently have, excuse me, is the 25% tariff on China that's been there since Biden was the president. So who knows? I think what gets left out is going to be the biggest market mover. I think markets have pretty much priced in those 25% numbers for Canada and Mexico, and even us for our base metals.
Yeah, I was going to say there's been a lot of news around those pretty much over the last months. Pretty much ever since Trump decided to pause those tariffs on Canada and Mexico, everyone's kind of been expecting it to come in. Markets probably adjusted to it where it will be. Might not see too much of a push, maybe like an initial movement on it, but it'll probably level out. Okay, yeah, and then the other news announcements coming up this week. We've got two non-farm payroll and non-farm employment data releases coming out. Jeff, could you give a little bit of color on the difference between those two?
Yep. So the ADP number, which always comes out a couple of days before the official number, is a private sector survey. So it's a survey rather than a statistical analysis. It's a little bit different in the way that it's calculated. I remember the very first time, I'm that old that I remember the very first time this data release came out, and it was a long way away from what the real payrolls number was. But lately, what it's doing is it looks like it's actually being a really good influencer for not the current month's payrolls, but the next month. So I don't know why that is. It's probably some sort of a timing difference in terms of when these things are reported. But expect those numbers to be different from each other, and expect expectations for next month's non-farm US payrolls to be led by this month's ADP.
Well, especially going on with like the impact of Elon Musk and the Doge group as well. It's going to be a bit of volatility in the data series over the coming months. It'll be one of those. Nobody really knows exactly what he's going to do, but he's throwing a lot of thoughts out there. So I guess we'll just kind of wait and see.
Well, they got rid of the education ministry last week, so I mean, surely that hasn't been factored into the numbers, right? I mean, literally, they just got rid of all of it. So, and again, so it depends how long it takes for them to actually remove those people from payroll into when they filter into numbers. So it's a little bit wishy-washy in terms of how it's going to impact. But expect, I guess, the US is in cost-cutting and firing mode, so expect that unemployment number in the States to disimprove rather than improve.
Yeah, exactly.
All right, cool. Well, let's go over technicals a little bit. I wanted to do this today. Just look at the dollar index. The dollar index is, as the name suggests, an index of the US dollar against I think some of its major trading partners. Normally, when the markets are a little bit funny, it's kind of nice to go back a step. And this is rather than looking at the dollar against the yen or the dollar against the euro. This is just the dollar against itself. So you can see for the last quarter of last year, up until pretty much the start of this year, it was on a tear. It was doing really, really well, and then the first week of this year, it just completely turned around and changed. And I mean, that coincides with Trump being inaugurated as the prime minister, as the president. So I think you'll find that's the movement in the dollar, is that we were going good until he was inaugurated, and then all of a sudden it's kind of turned around. So basically speaking, and you can see where it is now, it's coming down to support. And it's basing a little bit. I mean, it's had about a 50% retrace of that really good move from late last year, and just kind of sitting there waiting for the next cues. So, I mean, this for me personally with my trading, this is the kind of market that I want to watch, but stay away from. So I'm waiting for the next explosive move, but I don't want to be trading it right now today where it is. Which leads us to dollar yen. So as you can see, the dollar yen chart is fairly similar, but a little bit different from the index. The dollar yen had pretty much a really good bullish move from March last year. Traded up and up and up. It didn't really stop. It was all about dollar strength. We were talking about intervention on the way up. That never happened. And then it turned down. When's that? Kind of March? So not long ago, 3 or 4 weeks ago. It's broken that long-term trend line and it's come straight back down to the retracement level. We'll talk about the retracement level in a minute, but you can see what it's done. It's done that. It's basing right now so the difference between when these charts were pulled and current price is the current price on dollar yen is just a little bit under 149, and it's just kind of sitting there. So I think it's going to be just sitting there until we get the tariff news. But what I did find was that you can see there. So it's fallen about 40 pips today. The 61.8% retracement comes in at about 149.30, 35. That's going to be the next major support. We've got from the move down, so resistance levels are at 150.25 and 150 even. So 150 the figure we say in financials. I kind of want to sell rallies on this thing. I just, to me, it's a lower low, and I mean from basic technical analysis, I think it's going to go lower. So I'd be looking at selling up to about the 150 level, just because markets love round numbers, as we always talk about. You could pretty much put your stops above 25, so maybe 150, 35, 40, just to be safe, and then target that 149, 30, 35 area. So, I mean, that's a decent move. I mean, if you can pull 70 ticks out of dollar yen without too much effort, you're happy with that, right?
Absolutely.
All right, cool. So that's the technicals. That will leave us with some Q&A. So, Ollie, did you just want to take on the first one?
Yep. So first question we commonly get, so what's the state of play in Canada at the moment? As we already touched on, Canada's just so exposed to the tariff news at the moment. So right now, we're kind of just waiting for the April 2nd announcement. Right now, it's strong sentiment, seeing a 25% tariff across the board being put on all Canadian goods exported to the US. What I wanted to, I guess, touch on for that one, it'd be interesting to see how that impacts on the oil markets, particularly just because Canada does currently export around 90% of its oil into the US. There's chatter about Canada potentially cutting off the oil pipelines to the US, though I strongly doubt that would happen, as it would just leave too much a hole in the economy. But I'm expecting the price of oil to go up, putting pressure on the consumers off the back of that. As well for Canada, the unemployment data released on Friday. So it is forecast to increase to 6.7% against the current 6.6%, potentially signaling a weaker Canadian economy and potentially putting downward pressure on the Canadian dollar. So overall, I'd say it probably wouldn't be a very fun week for the Canadian economy, although it should see some volatility and therefore opportunity for the Canadian dollar traders. So I guess now I'll just take a look over the border for question 2 for you, Jeff. So what do you reckon? Is the US losing its status as the most important economy in the world?
Oh, that's a good one. So I'm a little bit of a financial historian, and you read the thing about how long empires last, and I think the average year for an empire, the average length of time for an empire is about 75 years. I think you could probably say that we've been in US dollar empire since World War II. After World War II, we pretty much had the US dollar as the main currency. It took over from sterling. We've got the BRICS have now started their own SWIFT system. SWIFT is the system that banks use to transfer money between each other. It's real-time gross settlement. So don't let the bank ever tell you that it takes 2 days to pass money. It just doesn't. The SWIFT system is what banks use to talk to each other as well. So the BRICS are going to start their own. That takes Russia and China both into the BRICS system. Russia and China, I think, are irrespectively the third and fourth largest economies in the world at the moment. India is in there as well, so that's 3 of the top 5. So that BRICS payment system is going to be really quite important and a big story to follow going forward. It's been a long time. It's hard to lose the US dollar as a reserve currency just because it's so liquid and there's so many bonds. But I think we're kind of winding up. We're certainly, on the downslope of it. I think we've probably got 4 or 5 years left. If Russia, China, and India got themselves together and actually sorted themselves out and became, good economic partners and had some trade relationships with other countries that were firm, I think maybe. I mean, maybe in our lifetime or my lifetime, maybe Ollie, certainly yours, we might see a different currency come through. I mean, if the Russians and the Brazilians and the Indians were to come together and say, you know what, we're going to have a currency block and have their equivalent of the euro, then all of a sudden it's all bets are on.
Interesting world to be in.
It's always interesting times. All right, so that's it for us today. Sorry we ran a little bit over. Just for your guide, this video will be uploaded to our VIP trading room at its completion. Will also be uploaded to our YouTube channel. On the VIP trading room, that's staffed by Ollie and I. We're in there all day long, and Mark, who isn't on this video but is in our team as well. We're also got some guys from the Everest Fortune group. They're a group of independent analysts that work out of Singapore. They're logged into there all day as well. So if you've got any questions, you want to share some charts, get some advice, or not advice, get some comments on something, feel free to reach out to us in there. We also do our weekly technical video every Monday that gets posted into the trading room too. And we've got our private client daily update that is emailed out every morning, written by us. And if you want to be added to that, please shoot us a note through the trading room, give us a buzz, or shoot us an email. Thank you very much. Thanks, Ollie.
All right. Thanks, Jeff. Have a good one.
Cheers, mate. Bye-bye.